Thank you for joining us. I'm Marlon Bowling for analysis on today's ag markets. Let's turn to Brian Hoops of Midwest Market Solutions, and he is based in Springfield, Missouri, and he joins us right now. Brian, what's the situation there? I know in the last couple of days, I believe you guys have had several inches of rainfall there that has maybe kept guys out of the field, but I'm guessing in your part of the country, probably most of the corn and soybeans have already been put in. Is that true?
Oh, yeah, put in and up and growing and looking good. So, yeah, a lot of rainfall last night, almost 2 inches right in our area. So things looking very green, lush, and pretty healthy so far.
Do you have much wheat around your area?
Yeah, a lot of it, winter wheat. Nothing's, of course, spring, but some hard wheat in our area. And, it's getting to a point where we're starting to see a head on it, and that looks green and golden on top, so looking good so far as well.
So that'll be interesting. You're on the side of that dividing line where they tend to get more rain, and then you go maybe from Wichita westward, and then they miss out on the rain all the time. What is the situation? Will the wheat still benefit if they get rain this late in the season, or is it going to be more harmful for the harvest that's getting started here in Texas?
Yeah, no, it's a good question. They are starting harvest in Texas. We have clients there that are harvesting oats right now, and will turn to winter wheat very soon. But, in the Winter Wheat Council tour that was out a couple weeks ago, what they found was a wheat crop that was behind normal as far as maturity. So any rains that they get here, I think, will be a benefit. It should help that kernel fill and could add some bushels to a wheat crop that doesn't look to be as strong as last year. So it is a later maturing. Rain will be a benefit, and unless we get some rain in another 30 days, that's when it could really slow down the harvest. And that's what you don't want, is when that grain is mature and then you get a lot of rain on top of it.
Now, I thought it was noteworthy, though, that we did have an analyst, and this is not the first time I've heard this. He was on this morning talking about the fact that in Oklahoma, they're starting to see a lot more evidence of what they call white wheat heads there that suffered freeze damage earlier this spring. And now it's finally starting to show up. Are you hearing that?
Yeah, if you get, a white head like that, it means there's freeze damage, and there virtually will have no crop at all. There'll be no seed inside the head. So it's a real detrimental. If you do see that, that means that you're likely going to get 0 bushels out of it. So it's something you don't want to see out in your fields. We've not really heard that much talk about it. I think there is in sporadic areas, parts of Oklahoma and Kansas, that did receive some freeze damage. It's just so hard to tell early in the season how much damage is caused by an early frost. You almost have to wait until that crop matures and ripens a little bit. Then you're able to assess it much easier. And we're getting into that stage now where it's starting to mature and ripen. And
we'll get a lot more answers in the coming weeks here. Let's take a look at our prices on the corn this morning. It had a very good export sales number last week, but it cannot seem to get much out of it. It started out just a touch higher this morning, and we're still trading July now down 3/4 at 398.5, and December down 1/2 at 416.5. Meanwhile, on the soybean trade, it has had kind of a tough week. We had higher trade early last night, and then we have July soybeans turning around and going 1.25 lower this morning. We're at 998.5 right now per bushel, and that is, of course, under that $10 benchmark. We're now about 9 cents off our overnight high. November up 1/2 at 1009.5. The wheat trade we were just talking about here has Chicago July now trading 7.5 higher at 501 3/4. More and more people starting to point out problems in, for example, Canada, also in Australia, and maybe some other areas around the world. That would be interesting moving forward. Kansas City wheat on that July contract is now trading 8 3/4 higher at 522 3/4. In the Minneapolis wheat trade today, we have the July contract now 4 3/4 higher. We're at 616 per bushel. And in the cotton market, we have the nearby July contract trading 119 points higher at 85.54. December now up 106 at 81.75. We'll be back talking more with Brian Hoops about our livestock trade when we come back right after these messages. Our guest is Brian Hoops of Midwest Market Solutions, and we're going to focus now on our livestock trade today. Brian, I know you keep in close touch with the wire. What's going on as far as any cash cattle trade activity? Anything showing up yet today?
Yeah, we're starting to see a little bit more cleanup sales. This is 114, so we've lost a few dollars from earlier week trade, which probably isn't a real surprise given how hard the futures market has broke this week. We're starting to rally the futures more on some short covering than anything, but the cash news little negative this week. Really not unexpected that we'd see some weakness in the cash markets as the cutouts and cash both have a seasonal top and start to trade lower about this time of year.
All right, let's take a look at our current futures trade. And on the live cattle board right now in Chicago, we currently have that nearby June contract trading $1.62 higher. It's really getting a firmer tone here really fast here today. We are now at 103.45, so we're over $2 off of our earlier high this morning. And as we take a look here at August, we're 35 higher at 99.40, so not near as much momentum on the August contract, still under $100. October 38 higher at 102.68. And if we take a look here at what is going on as far as the feeder cattle trade, let's go ahead and roll over there to take a look. We currently have the May contract 50 higher at 133.22. And we have the August contract up $1.63 at 138.35. What's been going on with the wholesale beef trade today?
Well, a little higher cutouts at the midday time frame, and I think that's encouraging some short covering in this market. This would be about the third day down as well, so that usually is a sign when we get the market oversold enough that you can have some sort of a rally on the third day or after 3 days down. And so, not a lot of movement, not a lot of higher prices, but still expecting that the cash markets are going to work their way lower along with the product values.
Okay, so excuse me, where you have the beef cutouts going higher today and by $1.40 on the choice, what's it doing on the wholesale pork side today?
Well, yeah, the pork market's up $1.32 again. It's been a pretty strong week for the pork, and we've seen some strength here, but that's a pretty good jump in the pork cutouts into midday. Futures market has rallied this week and trying to rally in anticipation of further strength in the cutouts and the product values. Okay,
let's look at our lean hog futures and get everybody updated on our current trade. Let's take a look here at our nearby June contract, which is trading 48 cents higher. We're at 76.38. We have the July down 60 at 78.12. And the August contract down 37. We're at 77.48. For some reason, though, we have the far out deferreds trading a little bit higher today. Any reason why that would be?
Yeah, it's a lot of spread activity. Their traders are in there selling aggressively the summer months, the July, the August contracts, and buying some of those deferreds, figuring that spread, for example, July to December is over $20. That had just gotten too wide, and they wanted to narrow that spread in a little bit.
Okay, the dollar value. I wanted to ask you about this as well, where we have had quite a bit of firmness in the value of the U.S. dollar index lately. It's kind of settling back now, but we have June futures still about 70 points higher. We're at 93.360, and there has been a lot of talk about that and its corresponding relationship with things like the Brazilian real or the Canadian dollar.
Yeah, it's really important to keep an eye on that dollar. A higher dollar should be bearish for commodities. And we've seen a slowdown in our export business over the last 3 to 4 weeks as that dollar has rallied off of its lows. You can certainly say we've been in a pretty solid uptrend since February in the U.S. dollar. We have a lot of resistance coming into market at another full point higher at about 94.20. And so it's something that, definitely have to keep an eye on and watch. If that dollar remains strong, you have to expect that our exports are going to be weak.
All right. Thank you, Brian. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. So that's the very latest.